Hi, Joseph Lozano with the April Properties, and we're here to talk with you about the real estate market. Everybody wants to know where it's at and what they think it is doing. So let's review that today because it's pretty interesting. You know, as we grow up, we think everything is new, you know, like that market crash in '08 and, you know, the economies and ups and downs. But if you actually talk to some of the older people, they've been through it before, and it's not so new. Everything's in cycles. So let's talk a little bit about where it's headed and what it's been doing. So I have a real estate cycles chart here. We'll get to that in a minute. But off of my experience since about 2011, when the market was at its complete low, you had 2011 and 2012. The market was at the bottom. Now in 2013, it started to rally a little bit because all the investors had soaked up a lot of the bank-owned properties. A lot of first-time buyers were even getting in on it, and some new investors appeared. So those started coming out in 13, and it's caused a little bit of a rally. And you know, there was bidding wars for the first time in a long time. Okay, so you had that in 2013, and then it brought the market out of the low, okay? And then you had gone into 14. So it came up, and 14 had some new values. All right, those remain until 15, okay? Now in 2015, I call it the perfect market. Why? One, interest rates were super low, and buyers, after going through 13 and a little bit into 14 of the rally, the bidding wars kind of calmed down, and the new market rate was set, pricing. You had people for the first time in 2015 able to see enough money to retire or start to move on out of their homes, just the beginning. And so it was kind of the perfect market. I was out there with clients. We had things to look at. Things weren't flying off the shelf, and the interest rate was low. Great feeling. Okay, speed up to 2016. Mid to late 2016 into 17. Here we go again. Beginning of the low inventory, starting to see the bidding wars again. But it, unlike 13, it never calmed down. It went from basically mid 2016 to current. I mean, everybody felt it. I was looking with clients for a whole year, you know, and bidding wars and everything. So you learned how to win those and everything else like that. So that brings us to our current market, all right? So let's explain the real estate cycles now. So you got 99 to 2006. It was up. Then from 2006 to 2007, it started to create its downward. So from 2007 to 2012, we had the low. Okay? Then from 2012 to 2018, it started to go up, 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 and up. And same thing to about, I'd say beginning of this summer is when the hype started to be over, and I really started to see the market change. I started to feel it. Things started to sit a little longer. It went from 1 to 3 days to start sitting for 10 days. That's when I started to know, okay, we're starting to enter into a different market. We're switching from a seller's market into a buyer's market. The hype is over. The low inventory was a long 2.5 year stretch, and it's due for a change. And that's my point today. You know, the real estate has always gone up and down, up and down. It's always, you know, gone up and then reset itself. And, you know, is it always a bad thing? No, it kind of creates opportunity for buyers, investors, and everything else like that. It's kind of got to come down sometimes. So, but people have no choices sometimes but to sell anyway or to buy anyway. You know, career changes, so forth, things like that. So the market is always moving, whether you like it or not. So what I want to explain today is what I'm going through with my clients. Right now, we are into 18, like I said, and we're starting to feel the change, okay? It's just beginning. And it's very important if you're thinking about listing your house, and your pricing. You know, everybody wants to try a higher price, but usually when you're within 10 grand from what your house is actually worth, you're going to get sold, and you're going to get sold rather quickly. You have some people left over from the low inventory stage that are still staying high or feel like their house is worth more than what it is. And actually they're hurting themselves because the people that are going to be priced right are starting to unload their houses. So we're doing this. We are cresting right now. So right now, we just made it over the hump to this new market. So would you rather price yourself here, here, or here? If you price yourself right and get sold, what you're going to do, especially if you're buying another place, is you're still going to get a good enough value before it dropped all the way, and the market is changing to a buyer's market. And that has already set itself. I'm seeing price drop after price drop. So what's going to happen is you're still going to get a good deal. You know, you're going to sell before it's gone all the way down and still get some of this low inventory values, but you haven't hit bottom yet. And you're also going to get a good deal on your purchase. So basically, you want to price yourself correctly. You can try to ask for $20,000 to $30,000 over what your house is worth, and then when you get down here, everybody else that did price their homes correctly, now you're playing catch up. Everybody else is sold. Now you're entering in a worse market, and you're delaying your time anywhere from 6 months to a year. If you're looking to retire or buy another property, you're just delaying yourself from moving forward. So that's pretty much the current market trend and what it's been doing since the crash, basically. This is just to explain that the real estate market always moves. It always comes up and comes down anywhere from every 4 to 6 years. Let's talk interest rates. Interest rates are still below 5. They tried to raise them almost just under 5 this year. But they are still in record lows. So, you know, even anything under 5, I would say we're doing good. They're going to raise them eventually, but right now, everybody's still getting a good interest rate if you're anywhere under 5. So hopefully they'll stay down. I like to see them down. We all like to see them down. That's our money going to interest we don't get back. Okay. Thanks for watching. I hope this video helped you. Leave some comments below. We'll look to get back to you and answer any questions you have. If you're looking for trust, honesty, and relationships, or whether you're buying, selling, or investing, Joseph Lozano.